The most watched finance video in YouTube history is not about getting rich. It is a warning. Ray Dalio's Changing World Order has been watched 380 million times in its short version and 189 million more in its full version. It argues that empires rise and fall in long cycles, that debt is the fuse, and that the United States looks late in its cycle. That video posted more than 4 years ago, which means something useful. We can check it, not with opinions, with the Treasury's own debt numbers, the IMF's reserve currency data, and what markets actually did since. Some of its claims aged shockingly well. One aged in a way every investor should understand before believing the next viral warning. First, the claims, stated fairly. The video says history moves in a big cycle lasting roughly 250 years with messy transitions of 10 to 20 years. It scores empires on 8 kinds of power, from education and technology to trade, military, and whether the world saves in your currency. And it argues the United States shows the late cycle markers: heavy borrowing, money printing, internal conflict, and a rising rival power. It does not give a date for any crisis. That detail matters, and we will come back to it. Those are checkable statements about debt, about the dollar, and about what history did. So let us take them one at a time, starting with the claim that is easiest to measure, the borrowing. When the video posted, the gross national debt of the United States had just crossed $30 trillion. As of this month, it is $39.4 trillion. That is 31% growth in roughly 4.5 years, an average of billions in new borrowing every single day. Whatever you think of the grand theory of empires, the specific claim that American debt would keep compounding was not just right. It was conservative. And this is the part of the video no serious economist disputes. The borrowing trend is real. It is accelerating. And the interest bill compounds quietly in the background. Score the first claim, true and moving faster than when the warning was recorded. The next claim is the reserve currency. The video's argument is that world reserve currencies fade as empires borrow too much. Here is the data. In the year 1999, about 71% of official global reserves sat in dollars. When the video posted, 58.8%. Today, 57.1%. So yes, the dollar share has drifted down for a quarter century. But look at the pace. That is a slow leak, not a collapse. And in the most recent quarter, the dollar share actually ticked up. The direction of the claim holds. The drama does not, at least not yet. If you sold everything waiting for the dollar's funeral, you have been waiting through one of the strongest stretches markets have ever printed.
Now we reach the uncomfortable number. Since the start of the year, the video posted, the S&P 500 has returned about 77% with dividends reinvested. That is almost 14% a year, through a bear market, a banking scare, and every headline in between. Sit with that. The most watched financial warning in history was followed by one of the better 4-year runs investors have ever had. Both things are true at once. The debt problem is real, and the market followed no timeline you could trade. This is the single most important lesson in this entire video. A macro thesis can be correct and still be useless as a timing signal. The economy is not a countdown clock, and nobody rings a bell.
What about the grand cycle itself? The historical anchors in the video are real. The Dutch guilder mattered once and does not now. The British pound ran the world's trade and then handed the baton to the dollar. Reserve currencies do lose their crown, usually after long stretches of borrowing and conflict. Historians broadly agree on that pattern. Where careful critics push back, and where we agree with them, is the idea of a regular timetable. 2 data points of fallen empires do not make a 250-year clock. In our view, the video works brilliantly as a map of forces and fails quietly as a calendar. Maps tell you what to watch. Calendars tell you when to panic. Only one of those is knowable. So here is the honest scorecard. 4.5 years on. Claim 1, American debt keeps compounding. Verified, 30 trillion to 39.4 trillion. Claim 2. The dollar's reserve share erodes. Verified in direction, but at a drip, and it even rose last quarter. Claim 3. The empire framing. Useful history, unprovable schedule, and the claim the video never actually makes, but 380 million viewers may have heard anyway. That collapse is imminent, not supported, and the market spent 4 years disagreeing. That gap between what a careful video says and what a scared viewer hears is where most of the money gets lost. The warning was measured. The panic was optional. So what do you actually do with a brilliant, frightening macro video? You take the map and ignore the calendar. The debt trend is real, so you hold real assets, including broad stock index funds, which own the productive machine itself. The dollar drifts, so global diversification stops being optional. And because nobody can time any of it, you keep buying on a schedule instead of waiting for clarity. Clarity is the one thing markets never sell. Notice that this is exactly what the boring math has always said to do. The most watched finance video ever, fully fact-checked, lands you back at the least viral strategy on earth. Own everything, keep costs low, and let decades do the work. One last number worth understanding, 380 million. Why did a warning outdraw every how-to video ever made? Because fear is urgent and compounding is boring. A crisis has a villain and a deadline. An index fund has neither. This year, the pattern is repeating, with famous investors warning about an artificial intelligence bubble, and those clips are pulling millions of views while the boring math sits in the corner. We are not saying the warnings are wrong. We are saying the previous, most famous warning in history was directionally right and still would have cost you a fortune if you traded your fear instead of your plan. Watch the doom. Enjoy the doom. Fund the plan anyway. 3 moves before the next viral warning finds you. 1. Split every macro claim into map and calendar and act only on the map. 2. Check the number behind the fear. The debt data and the reserve data are public and free, and reality is usually slower than the thumbnail. 3. Automate your investing so your plan runs even when your feelings do not. Prediction videos age publicly. Math does not have to age at all. Next, on The Long Game, the same author's other record breaker, How the Economic Machine Works, is the 30-minute cartoon that taught 93 million people how the economy works. We check its math, piece by piece, and find out what the cartoon left out. This channel is education, not financial advice. If this video saved you money, the like button helps someone else find it. Subscribe to the Long Game HQ for weekly money math without the hype. And watch next, How the Economic Machine Works. Fact-checked. The cartoon that taught 93 million people economics. We check its math.